Hello and welcome everyone. Thank you for stopping by on my channel. Consider subscribing, liking, leaving a comment. Tell me what you think at the end of this video where we're talking about velocity banking, personal finances, get your money right. Alright? So look, I got the numbers already up. Okay, I'm doing a real scenario, alright, for a friend of mine. We're going over velocity banking, how to increase my cash flow, how to lower my debt, pay it off, lower my expenses, and build my credit score, all using my own income. Man, let's get it right. Let's figure it out. So that's what we're solving for in this scenario, okay? So without wasting any time, let's dive right into it. Okay, income, $1370. All right, this is a young individual, just got out of college. All right, landed the job, and this is what they got. Okay, they're starting out. Income is $1370. Their current expenses are about $800, and this debt right here, what do you think it is? Obviously, student loans, man. Oh my God. Right? So high. I think that's about what this person's gonna end up with, give or take. Right? It is gonna be high, and their cash flow is $500. All right. So we need to solve for cash flow. We have to increase it. Right? How do we do that? Using our own income. All right. So as soon as this person gets this job, they start working, the first thing I want to do, I want to fill out that W-4 properly, right? I want to make sure I'm not paying too much, I'm not overpaying in taxes, okay? So that's step one to increasing my cash flow. I'm going to get that filled out. I'm going to get my allowances right, all right? Step two is we're going to set up a new checking account, okay? This person already has one, right? We're going to open up a new checking account, but not just any checking account. We're going to get a checking account that has a promotion or reward tied to it, okay? So TD Bank, Bank of America, Chase, Wells Fargo, what else? All of them, Citigroup, okay? They all have these checking account promotions. You just got to look them up. They're not just going to give it to you when you walk in the door. It's not how that works. You have to search it up, look for it. You'll get like a code or some sort of word, right? 2018 checking account promotions. And we are going to split up the paycheck, okay? Because the way to get that promotion is they want you to deposit like $500 or more in 60 days or 90 days or whatever the case is. Anyone can do that, right? So what we're going to do is we're going to use our cash flow to open that new checking account, set up direct deposit, give me that reward. The rewards are going to be anywhere between $100 to $250, right? That increases my cash flow, okay? And we're going to do that for like 1 to 2 months because that's how long it'll take to actually get the reward, okay? In that month or 2 months, guess what? I'll have $1,000 saved in that checking account plus a reward of $100, $250. My W-4 is filled out properly, so I'm probably taking home an extra 100 to 150, maybe 2. It depends, right, on how much that person makes and how much they're paying in tax. Okay, that increases my cash flow. Step 3 is I need to get a secured line of credit. Okay, you have to build your credit. Why? Because it's going to increase your cash flow. Simple. Okay, so after the 3rd month, after I got my reward, I should have, on the time scale here, do the math, I should have $1,500 sitting in that other checking account. Meanwhile, all my expenses are being paid. I'm making the same amount of money, right? Nothing's changed. Okay? What I'm gonna do is I'm gonna get a secured line of credit for $500. Okay, that's a good starter, and you can go with Discover, Capital One, a credit union, right? Those are gonna give you the best interest rates, and they're gonna not charge you an annual fee, which is also really, really nice. Okay, so how are we going to use this secured line of credit? All right, because they're backing up with 500 of their own dollars. We're taking it from that other checking account and we're putting it here, and the bank's going to give me a credit card with $500. Okay, makes sense? Cool. Of my expenses, all right, for this particular scenario, they can use $450.80 to velocitize. All right, they can use this $450, right, in expenses. That's gas, that's food, that's car insurance, phone bill, you know, whatever I can pay with a credit card, I'm gonna put it on here. All right, and in 30 to 60 days, I'll owe it, right? But what's gonna happen in 30 to 60 days? I'm gonna get paid, right? I'm gonna have another 500, okay, of cash flow in that next month. All right, and what's gonna happen is I'll have this checking account growing. I'm using my secure line of credit to pay my expenses. I'm using my income to pay me back. All right, so I used the money twice right there. The whole purpose of it is we're trying to build credit at an early stage so that we can get access to what I like to call debt weapons, right? So we're gonna do this secured thing for like 6 months. Not long at all. Okay? After 6 months of having a secure line of credit, depending on where you go, you can get your money back. The money that you backed it up with, right? The 500. Can get that money back, okay? Which increases my cash flow. Goes right into that checking account. I now have an unsecured line of credit for $500. They may even raise it. Okay, you can ask. They'll raise it because you're using $450 every single. You're running that thing up and paying it right back down, and running it up, paying it back down. All right, so they're gonna raise that thing probably double what you have. Okay. Now, here's where it gets interesting. Is now that, you know, on the time scale now, we're 6 to 8 months into this thing, right? After, I want to say the 10th or 11th month of doing velocity banking is when we're going to look at getting ourselves a personal line of credit, all right? And we can easily get anywhere from 3 to 5K. Easily start that out, right? No trouble. Around this time, I've got cash stacked. My expenses are still being paid, right? What I have to worry about is the debt that I'm gonna get. What's wrong with my marker, man? Yeah, that's better. I gotta worry about this, which is what's coming up, right? Because student loans, right after you graduate, you got like 6 months on deferment before they hit you with that first month's payment. All right, how are we gonna pay for this? Do we refinance like everyone else in the world is doing and getting screwed? Do I consolidate, right? Do I go for convenience? All right, I'm gonna do a video on how disturbing it is to refinance and consolidate when you do the math. All right, you'll come to find out, oh my God, I did not save no money. All I did was try to lower my monthly payment, okay? But it ended up paying even more interest probably, right? Or whatever interest I saved by refinancing or consolidating, I'm just paying the private lender, right, over time. That doesn't make sense to me, yet everyone does it, right? What does make sense is if I don't refinance right away, okay, I do the math, I consider, okay, is velocity banking gonna work, right, if I do the math, okay? Will I save more than refinancing or consolidating, right? And even if I didn't do the two, I still leave the door open for what? Student loan forgiveness, right? Income-based driven payments, right? I leave that door open to having maybe the company I work for pay the whole damn thing off, right? Over time, just by working for them, right? Or getting a grant or something, all right? When you refinance or consolidate, you go to a private company, and once that occurs, nobody can pay that, okay, but you, right? You close the door from the government being able to pay the damn thing for you, where you don't even have to do velocity banking because you got eligible, you're low income or something like that, right? We want to leave that door open before we refinance or consolidate. I'm not saying that refinance is the worst thing or consolidation is not a good thing. I'm just saying you do close that door from being able to have all that paid off dramatically. So, with that being said, velocity banking, I can still pay the debt using the bank's money, using my income to pay me back, and do it again, over and over again, right? And that goes to the whole strategy of not only increasing my cash flow, lowering some expenses, paying debt off, and building your credit in the long run, because you're going to need credit. That's what it is, right? You think cash is king? My friend, credit is where it's at, okay? Walk into any dealership, go to any mortgage lender. If my credit is better than yours, I am getting a better deal, period, okay? I don't care how much more money you got than me, I'm getting a better deal, okay? So it's nice to have credit, okay, going and working for you. It's even nicer when your credit's so good that you can use the bank's money to pay all your debts, right? At 0% interest or less, or a little bit more, right? And make up for it via your income, right? So, recap, okay? Step 1, fill out your W-4 properly, all right? Get those allowances. Open up another checking account. Get that reward money. That's free cash flow. Why not? This person got themselves a secure line of credit using expenses, right? We're running expenses through that credit card, and we're going to pay ourselves back in full and do it again. Pay ourselves back, do it again. Pay the expenses, pay ourselves back, do it again. A couple months down the road, right? We built it out. This secured became unsecured after 6-7 months or so. Okay? Around this time is when this will hit. We'll figure out what our monthly payment will be or whatever. When that occurs, I'm going to look at possibly getting ourselves a personal line of credit. Anywhere from $3,000 to $5,000. Alright? And when that occurs is when I'll do the math. I'll do 500 times 12, that's $6,000, and go a little lower and say 4, right? $4,000, make a chunk payment at this. Every single month, I'm dumping $1,370 into the line of credit. Only withdrawing 8. My cash flow stays in, okay? in less than 8 months, I'm consistently recouping that money. I never lost my cash flow, right? It's sitting right there. All my cash flow, 500, bum, bum, every single month, sitting right there, okay? Meanwhile, made a chunk payment of $4,000, bum, which lowers the balance, lowers the interest rate, lowers the overall interest being charged, right? Satisfies that month's payment, possibly even the next, okay? And every single year I do that, okay? In this scenario, this is based on this person not getting a raise, making more money in their business. Like, we're not even accounting for free cash flow is what I call it, right? We're not even accounting for that. This is just a very conservative way. So yeah, hey, if you agree with this, if you like this, all right, if you want to learn more about velocity banking, velocity of money, debt acceleration, whatever you want to call it, all right, it's basically Dave Ramsey's method on steroids, okay? If you want to learn more, reach out to me. I'm here. I'm available. I'm ready. Let's go to work, please. Let's kill this debt. Okay, debt is very bad. Okay, we want to have good debt, not bad debt. Okay, student loans, bad debt. Car loans, that's a bad debt. A mortgage, that's a bad debt. Okay, we want good debt that makes us money and increases our cash flow. Okay. Alright, let's see. I'm happy with this. That's it. I'm done. I'm gonna cut it here.